Good afternoon, everybody. Welcome again to another episode of Friday Drinks. Thank you very much for the support. Everybody who's been subscribing, who's been sharing and commenting. We thoroughly enjoy your comments. And, the producer is always at wit's end to tell us how to improve. And I hear, some of your comments have been quite scathing. But we've been improving, producer.
Yeah, at the end of the day, we are doing this show for our viewers. So we are always going to listen to whatever comments. We are looking forward to flattering ones, but also even scathing ones. It's actually part of the growth. That's the only way we can improve the product. So we are quite grateful for all your comments, and we don't take them lightly. Obviously, not just looking for comments that praise us, but even those ones that are also criticizing the work that we do. That's why we do it.
Okay. And why are you wearing a Shabangu hat?
Why did you could have?
I was going to ask that as well.
You could have just called it a Tendai Beat hat or whatever. Before Shabangu, I think there were so many luminaries who would wear this. I'm sure there must have been some of the top
Where are you getting the inspiration from?
Oh, well, I think it says something about my age, right? So when you get into middle age,
Territory.
You start getting, you start looking at life differently. Things that you never used to think were important, they'll start being of value. After chasing goals, success, you are at a point where you have achieved certain things, and there are some that you have not achieved, but you are like, okay, I might as well live
Way
life.
an interesting hat.
Yes.
In other words, a midlife crisis.
Oh my gosh.
Tell us,
Yeah.
what's your midlife crisis looking like?
I'm not going through one. What are you guys drinking? It looks
Iced tea. It's spring and, it's lovely. What do you think so far?
You will not believe it, but this is my first experience
with iced tea.
Yeah,
Yes, you're a culinary philistine.
of course. It tastes differently. At first, I wasn't too sure what to expect because you expect tea to be hot, and now I've got tea in a glass and some ice. Yeah, it's okay. It's
okay. Okay, let's see what happens.
As long as there's sugar and milk, I can.
Then it's just water and milk and sugar. And you?
Guys.
What are you having?
Well, I'm having a spicy French rum. I think I think I've had this on the show once upon a time, but it's just, got a wealth of flavor and character, and it's. I mean, even non-drinkers like you, if you actually just smell it, right? I think you'll pick up, a whole bunch of flavors and odors that are quite interesting. Any comments?
Roberto, are you trying to get us drunk?
But you're not going to get drunk by smelling.
Well, I
rum.
felt it.
Yeah.
What is it made?
So rum is it's a spirit that's made from sugarcane. So typically they harvest the sugarcane, and then they take the molasses, they add yeast, it ferments, then they distill it, and then they age it in a barrel, and eventually bottle it.
Lovely.
Yeah.
It's very strong as far as I'm concerned.
Yeah.
Okay.
That's the feeling I had.
Like the alcoholic content, you can actually feel it the minute you.
Well, it is
Sniff it and then,
it is a spirit, just like whiskey or.
And for a non-drinker like me, the smell was like, I think the closest that I've gotten with a smell like that was something like a coffee syrup or something, like a very strong one.
Yeah. It's a lot of alcohol.
It's a lot of alcohol.
Yeah. Well, anyway, gentlemen, as it so happens, the MPS, that's the Monetary Policy Statement, has just been released by the new governor, John Mushavanu. And this is 5 months after the introduction of ZIG and 5 months after he took over the reins at the central bank. So this is quite a useful piece of writing because it sort of gives an idea of what he's thinking and the headspace that the monetary authorities are in. We know that there hasn't been any change, right, of the committee itself, the MPC. The committee is still the previous, whatever was there during Mangudya is still the same, but now you've got a new lieutenant, and he has a way of looking at things. I think more importantly, he gave us a lot of literature, which we had to quickly go through and sort of, gauge where the market is and what his thoughts are. So the way we're going to do it is a little different, and please, audience, please bear with us as we take apart the MPS. What we want to do is to first contextualize it and sort of understand where the market is. And there are ways in which we can do it. It's just, going into different supermarkets. We've got the resident grocer, Ranga, who tends to tell us exactly what's happening in the supermarket. And then we've got the resident alcoholic. And he can give us a glimpse of what's happening with alcohol.
It's so flattering.
Are you swiping? Are you swiping ZiG or are you swiping US dollars? What's the market looking like? So that's essentially where we want to start. Then the second thing that we're going to do is you guys are actually in the marketplace, the stock market, and that also is a proxy to some end. And we are going to get into that, what's actually happening in the stock market on the stock market. And the MPS was hard pressed to also explain to us what's actually happening in the capital market. So let's see what we can read from there. And then having got that context, then we can get into the weeds and sort of understanding what he's saying and whether it comports to the reality that we experience, in our everyday, right?
Yeah, sure. Let's do it.
So let's do that. So the first thing is, Ranga, tell us, going into the supermarkets, what have you noticed over the last 5 months in terms of prices, in terms of usage of ZiG and US dollars, and just give us a bit of color.
So when the ZiG was introduced early April, in the supermarkets, obviously, most of them were well stocked, and they had a variety of products, and you could literally get whatever you were looking for, and it was easier. You could just choose whether you want to pay US dollar or ZiG. And what I observed, maybe for most of April, most shoppers were actually buying using USDs. So there was a lot of US dollar activity that was still there, obviously because the ZiG, whether in terms of the actual cash or in its electronic form, was not sort of readily available. And personally, I actually sort of experienced that transition from using predominantly US dollars to starting to swipe for some things. And it looked okay for a while. I think also you then see this proliferation of arbitrageurs who are trying to say, can I swipe for you? And so that you could give them some US dollars and all. But in the last month, particularly this month, I noticed something quite striking in the shops that I frequent a lot. So the first thing is the product range has reduced quite significantly. So typically when you walk into a supermarket, because basically the shelves represent so the merchandisers, they're basically buying or renting shelf space. So when all things are equal, you'd actually find a particular product being allocated a very small sort of corner, with the rest of the stuff maybe being in the backyard. But when you get into a supermarket where like 4 meters of shelf space is actually allocated to one product, that's actually a sign that the product
is disappearing.
Yeah, disappearing, and the supermarket is actually trying to handle the optics of not leaving the shelves empty. So that just tells you that most products are actually not being replaced whenever they are being bought. I also noticed the fact that, in fact, I was surprised this weekend actually when I walked into one big chain where the shop was almost empty. And I was
really, how big is this chain? We're not going to name it.
Yes, it's one of those big ones that actually.
Is this a wholesaler or?
It's more your wholesaler, your wholesaler
okay.
type.
So it's not the retailer.
No, it's not the
wholesaler.
It's a wholesaler type. The guys that sort of occupy whether it's more than a hectare of space, of shopping space, and basically the whole space was empty.
Well, and they have furniture.
Yes,
grocery.
they've got furniture, they've got hardware, they've got groceries.
And it was empty. The hardware, everything was empty.
There's nothing. And
in the store.
And I was saying to the attendants, where did the store go? Like, took 10 days, I come down. And then what was very clear was most people were just coming to swipe. And the retailer now probably finds himself with lots of Zim dollars. They are unable to replenish their stock. I've also witnessed scenarios where certain products you can't pay for them in Zig, for example, beef. So there are some butcheries, but also some supermarkets where they actually tell you that this particular product, yes, it's available, but you have to use US dollars. And so a whole
and what's the price like in US dollars and in Zig? What have you noticed over the period?
Obviously, the prices have had to change. So for your formal retailers, because they still have to keep that balance, it has to be convertible easily into your official rate. So the prices in US dollars have actually gone up. So that they can play around with that balance. So it's just creating all this confusion and chaos where more and more products actually vanishing. And obviously your established retailers can't tell you that we want US dollars because of FIU is actually quite prevalent. Also, another thing that I actually observed this week is so ordinarily you'd walk into a shop and swipe, no questions asked. Right now they actually write down your name and your ID number because they're saying we are seeing this tendencies of some money changers coming to swipe on behalf of shoppers. So
wow.
Yeah, so in that particular wholesale chain that I went to, I bought something. No, I didn't spend lots of money. I was just buying stuff for my farm. Surprise. And I think just some gambles on overall and things like that. They actually had to take down my ID number and my name so that whenever FIU wants to cross-check, it has to match that the same card, the card that has been used,
is not being used
by a third party. So
wow.
you see that whole control economy playing out as the currency
interesting.
Actually
Shumba, I know that you and I don't spend a lot of time in the supermarkets as our good friend here, but you buy a lot of alcohol, beer and whiskey from the supermarkets or wherever. Are you using Zig? Are you using US dollars? What's happening there in that particular market?
Yeah, so my observation has
been... And you eat out a lot. When you're going to restaurants, are you using Zig? Are you using US dollars? And what have you noticed in terms of prices?
So the supermarkets, the big retail chains, they seem to be under surveillance and constrained in terms of the effective exchange rate that they must apply. So what you'd find is a lot of the bottle stores sell exclusively in US dollars, and they tend to be cheaper in US dollars than the supermarkets for booze. But with the introduction of Zig, what's happened is that because of the controlled exchange rate, if you swipe in Zig, it's cheaper to buy from the big retail chains. So that's the case for sure when it comes to beer and some spirits. But it's obviously not sustainable.
But right now, have you been able to swipe for beer in a supermarket?
Yes, for sure.
Okay, all right. But and in a bottle store, can you swipe for beer?
Well, most of the bottle stores haven't really explored that opportunity, because most of the bottle stores, the sense I have is that they prefer US dollars. And you might have some experiences where
They
the
will
Zig
turn you
machines.
away. Oh, yeah, they're not working. So the other thing that I want let's go into the informal sector. So my tuck shop, what's the scenario there? What's actually happening with the tuck shops? Is the product range there? And are they trading in Zig, in US dollars? What's actually happening?
The tuck shops are well stocked. They've never traded in Zig. Those people, they are not. They won't shy away from telling you that we just do USD. And obviously, the products there are much cheaper. They are a lot cheaper. I've had to be sent on some errands to buy certain groceries whenever they run out. Some of these tuck shops, and even in some business centers in different places. So ordinarily, you would think that when you get to a business center, or you have to look for the big chains. But especially the women, they are actually quite innovative in terms of how they're shopping. So that they would actually direct you to a very small corner shop where they're like, if you want to buy washing powder, go there, it's cheaper. And so those ones, they are always well stocked, and their products are much cheaper. I think for a time they were sort of feeling, there was some fit that were going into the supermarkets when people had that opportunity to swipe, and the pricing differentials had sort of reduced. Mm-hmm. But right now, because either the products are not there, or maybe the prices also have sort of moved up, I think more and more shoppers are going to go back to the tuck shops.
So let me be a little.
And interestingly, even some local products. So it's not just your imported product.
Or local products is now finding its way in the tuck shops.
Yeah, some local products, you might actually struggle to find them on the formal market, but on the tuck shops.
Is FIU found in the tuck shops, or they're not there?
I'm not sure. So I think the way they would actually struggle is because this is a cash market.
Okay.
It is a predominantly cash market. It's shady in some way. Obviously, not all tuck shops are shady. We don't want to cast aspersions on all of them. Maybe there are some that are that are paying their taxes and doing things properly. But most of them, they receive their stock midnight. And because they are paying cash, so look, people have to be creative. You can't really blame them. Yeah, people have to be creative. So whether you have to deliver your product midnight at the tuck shops and you are paid cash, ipapo, it's better than maybe going to your established retail chain, and then you are paid 30 days later, and they want to pay you in Zig and those kind of things.
Yeah, you know what they say about the markets, right?
The market is always right.
Well, not that, and something else. The markets or prices are like electrons. They follow the path of least resistance.
This is true.
So, that's what we're finding. So you're a stockbroker, and I want to sort of get an idea of what the capital markets have been like, especially in the last 5 months. So if you look at, the ZSE, the trades and the market cap, and also VVEX. So let's look at...
VFX, yeah.
VFX. Let's look at when it was introduced, so 5 April, what has actually been happening in the capital markets.
So at a high level, to just simplify it, if you look at the markets post the introduction of Zig, the VFX, which is the hard currency burst, has been flat, no real movement there. And the local currency burst, the Zimbabwe Stock Exchange, has seen an appreciation of more than 50%. which is a
Yeah,
good
it's about
proxy.
83, 84%.
Oh yeah, so you know, and that just speaks to, in my opinion, what's happening with local currency money supply.
Okay,
I don't think the revaluation.
The Paro market rate. Where's the Paro market rate now?
23, I think. 22, 23.
23. Okay.
Yeah, so that's a 65% premium to
So
the
about a
official rate of.
40%. Okay, so 65%. So you're saying that the local stock market is moving in tandem with the Paro market rate on
Yes,
the exchange.
basically, because what's driving the repricing is basically liquidity. You know, so it's not like our economy has grown 50%, or the businesses, the underlying value of the businesses is in local currency terms is up, or rather in real terms is up. It's just that the supply of the local currency has gone up. So that's why we have a Paro market with a rate of 22, 23, and that's why the local base has moved up quite a lot as well.
Before I get Ranga to chime in, or maybe let's get Ranga to chime in. Give us a bit of context.
Yeah. So if you look at when Zig came through, the market cap was about 2.1 billion for the ZSE.
Okay.
Yeah, and then we saw the market actually in subsequent months actually losing some steam, where by end of April the market was down to about 1.6 billion.
Okay.
Yeah, but then when there was a liquidity injection onto the marketplace, that's when activity actually started picking up, and even the market also started to claw back. So I think it was more pronounced around in June, and mostly July was actually the peak, where even at...
So it moved from 1.6 to what?
It moved to almost 2.9 billion by end of July.
Wow. From so almost doubled.
Yeah, almost doubled by
and you're saying a lot of this is just liquidity injection.
in fact, all of it is just liquidity injection. So this is what happens.
And this is Zig with no place. It wants to find a home. And the easy home that it can find is in the stock market. And I suppose the real estate, but we'll get into the real estate. But
yeah, but you see,
that.
the stock market is is much easier, because it's just a matter of talking to your broker, and if they can find you some shares, the next thing your funds are placed. Real estate and other things obviously takes a bit of time.
And
So
then tell us about the Victoria Falls exchange.
the Victoria Falls exchange has generally been flat, because we are starting off. So when Zig was introduced around early April, it was at almost 1.1 billion. It's at 1.2.
Okay.
Yeah.
So to contextualize, you're saying that from 5 April, when we look at the ZSE market cap, it actually went down briefly,
And then it started.
and then it doubled
It doubled. Yeah.
over the 5-month
Yeah.
period.
Up to-
Whereas in US dollars, the Victoria Falls exchange
Has remained
has
fairly
remained fairly flat.
Yeah.
And we haven't, and this is just 5 months, so there's nothing significant in terms of the companies themselves that would warrant that doubling, except cash injection.
Yeah,
Cash
even
injection.
us as in the broking community, obviously you feel it, because so when when the liquidity starts coming onto the marketplace, you've got all this demand that's coming from every angle, and sadly, because of the nature of our market, there are probably about 4 or 5 tradable stocks. So all that liquidity is going to be concentrated on those top, probably three names, stretching it 4 or 5, before maybe over time then it starts also going into other stocks, because these are the only. So we have got maybe 4 or 5 that have got enough liquidity to be able to suck in the liquidity that is coming from those angles.
Okay, interesting.
Yeah, but when you're looking at the performances, if anything, I would say most businesses are actually in a much worse off position compared to last year.
Okay.
So the movement you are seeing is not really driven by the fundamentals of the business. It's more the liquidity that is coming in. So it comes in once that liquidity sort of dries down. So you'd find that up to now, that market which had peaked at 2.9 billion is now around 2.6 billion. Mm-hmm. Right now, there's very little activity because the liquidity has sort of dried down.
Okay.
If we have a sort of a sustained period of liquidity constraints, it's easy for that market to actually come off from that 2.6 billion easily
back
to below
to 1.6.
1.6.
Okay.
Yeah.
Now let's go on the power market. What's actually happening? So over the last 5 months, would you just give us a synopsis of what you've experienced? Have you seen it going up and coming down? Are you seeing a willing buyer, willing seller in the official markets? What are you seeing as far as the FX market is concerned?
Yeah, so I think firstly, in the weeks after the 5th of April, there was very heavy-handed policing by FIU of the power market. And I think, a lot of the big traders simply stopped trading. And the liquidity on the power market was just almost non-existent. But I think eventually, because a lot of players couldn't access currency through the formal channels, at the official rate at 13.7 at the time. Eventually, either they were just going to stop trading or, just take the risk of trading on the power market. There's that famous saying, bad laws make good people criminals. Mm-hmm. And eventually, if you're faced with the choice of you can't trade or you have to go into the power market, a lot of people then decided that they had to come onto the power market and trade. And the power market is a free market, right? It's you literally, the willing buyers and willing sellers there. It's the price discovery because it's illicit. It's not great. People trade in clicks of trust, and there's a lot of information asymmetry. Some people could be trading over there 22, others could be trading at 23 or at 19, but it's for the most part a free market. And
but why are these people not afraid of being arrested?
So I think they're caught between a rock and a hard place, in my opinion. They need to transact, to trade, to make money, to make a living, and they can't get the currency that they need through formal banking channels. So the choice is follow the law and watch your business shrink and die, or trade on the power market. So I think it's a very difficult choice for a lot of the people who need to unlock US dollars from
we saw Professor Mthuli coming onto the market and making it very clear that there are going to be more stringent controls around it, and people will be punished, and the severity of the sentence, I think it's will go up. Do you think that will deter people, or it's still the reality of people having to make a legal?
So I think for sure it will deter people. People will think twice. Already I think there's a cohort of business people who've just decided that they're not going to trade in ZiG at all. They don't, because if to the extent so.
But you still get arrested. So if you're not,
So what I'm saying
if you're caught not accepting ZiG, you will get arrested.
So that's actually only true in the formal sector, right? And what you found, I think, before the introduction of ZiG is that a lot of small informal players were happy to accept ZiG for 10, 20% of their trades. And to the extent that they would have needed to convert some of that to foreign currency, they would just go onto the power market. Now, because of this very heavy-handed policing of what's happening on the power market, a lot of these businesses will then take a view that they're not willing to take that risk of being arrested or getting into trouble, so they stop accepting ZiG completely.
Okay.
All right. And I would add, so it's not like business really enjoy getting their foreign currency requirements from the power market. I mean, it's not only is it making and such an inconvenience, it also not it's not good. It's not a profitable venture, as it were, because
It's extremely high
it's
risk.
high risk and expensive on their part. And whenever you find a well-meaning form of business resorting to that option, it's actually out of sheer desperation. So either you watch your business close down, or you have to do something. And I think right to your question on the fact that the Minister of Finance thinks that the best way is to be even more heavy-handed. I think what is really needed is for central bank or Minister of Finance, whoever is managing that interbank market, or the willing buyer, willing seller, to be able to consider these businesses and be able to give them their foreign currency requirements. And I think even if they don't get everything, I'm sure there must be a sweet spot, some sort of break-even sort of number, that if they can get it from the formal market at the rate which now the governor is saying is stabilized, will be able to then just help the operations to keep
so
going.
I disagree quite strongly with what Ranga's just said. I don't think that government should be in the business of allocating currency, based assessing. Oh yeah, I think Tinashe really needs this, for his business to stay afloat. So let's allocate X amount to him. Ranga, it doesn't look like he needs it as much. We'll allocate a bit less. I think the market should determine the allocation of currency. And one of the things that I find quite disappointing in this monetary policy statement is the formal banking sector is supposed to be is supposed to have a forum or be a platform where willing buyers interact with willing sellers. And this is simply not happening.
Well, it begs the question, is this still a structured currency?
Well, it's certainly not behaving like a structured currency. Because if it is a structured currency and there is legitimately ounces of gold and US dollars behind every unit of ZiG, then it should be freely interchangeable. There should not be a shortage of currency in the formal banking sector. We should not be hearing from any manufacturers or importers that they are unable to get the US dollars that they're looking for from the formal banking sector. I mean, the reason why a parallel market exists in the first instance is because there is frustration with the formal banking sector. No one in their right mind is going to pay 23 for something available at 13.9. Right? So the only reason why somebody would be out in the market paying 23 is because they can't get it at 13.9. And,
So what do you say to the governor? Because you were one of those people who actually believed the governor. Not just you. You had lots of business people who decided to offer products in ZiG, believing in the governor, that if I were to sell my product in ZiG, and
I'll be able to convert
when I eventually want to import. And that hasn't happened. 5 months down the line, it hasn't happened. What do you say to the governor directly?
Yeah, so what I would say to the governor is, let's have an honest conversation. The official exchange rate of 13.9 is not a free market exchange rate. It's a managed exchange rate. I've had many interactions with bankers where I've said, listen, I've got a client that's willing to put a bid at 15, at 16. Why aren't we seeing or hearing about these things, right? Because the exchange rate doesn't come from the market. It's handed down. And we saw this happen with the auction, by the way. The auction was supposed to be
an auction.
An auction, but it on the ground, in reality, it wasn't an auction. It was a managed exchange rate. And what we have today is a managed exchange rate.
Okay. So Rivara raises a good point, and I want you to address this from a supply of currency, because when we read the MPS and what the governor is saying, he's saying that when you look at the export surrender requirements, they're taking about 25 to 50%, and they're liquefying the market for foreign exchange. So there is a bit of supply, but we don't know what the numbers, the actual absolute numbers. He didn't give us those numbers, but with the auction, at least we knew that there was 40 million that was coming onto the market. But when you look at surrender, and here we have to speculate. When you look at our exports, they're probably getting closer to 150 million US dollars in terms of surrender. That's what the central bank is getting in terms of 25%. We know that half is going to government. So then they remain with about maybe 75 or so million. Are we seeing that 75 million a month coming on to the foreign exchange market?
From the MPS here, the governor is making a claim that, yes, 50% of the 25% surrender is from time to time injected onto the market to support the willing buyer, willing seller. But I think our interactions with market players, with businesses, with industrialists, I think it speaks a very different story where it has actually become harder for businesses to access foreign currency in this current setup than it was even in the auction. And
so where's the money? Where's the money going? Because all our exports, from what the MPS is saying, exports have increased, foreign currency inflows have increased, and yet the money that's coming onto the foreign exchange market is lower than when we had the auction. So where's that US dollar going?
That process of allocation of foreign currency to whoever is deemed to be deserving, I think has created, it has become even, it has become a gray area. I think with the auction, there was some level, you'd know that this has been allocated to this sector. But right now, they might actually be allocating more in terms of the actual dollars, but unfortunately, we don't know the identity and the criteria that's being used to allocate one and not the other, which is actually a problem. And I think in this allocation that they're trying to do, if they think there are some deserving, I agree with you, Rufaro, by the way, that it's not the business of government to be allocating foreign currency when they've got a market. But I would say if they really want to ring-fence certain areas, maybe they should run an experiment where, let's say for argument's sake, there's 10 million in the pot every week. And then they say we need 2.5 million for a certain ring-fenced businesses. They should then just leave the 7.5 million to be allocated by the marketplace. I think the net effect will be, we won't find ourselves in a situation where the official rate is 13.7 and the power market is 23.24, because it means a bigger chunk of the industry's demand is going to be met on the official market.
But Ranga, it's all very murky from where I sit. Why is the MPS full on literature and very thin on the numbers? Why can't they say, on this day, this week, and the week after, every month, this is how much money we've been allocating?
I think there's an
overall number, but we don't know what's happening on a week, because that then will give us an idea of what's actually happening on our forex market.
Yeah, so if you go on point number 23 of the MPS, here the governor is saying the central bank will in due course publish on a weekly basis some of the high frequency indicators. So as a forward guidance. So, okay, this is...
but if Mangujga could do it, why do you need to... So it's retrogressing, right? Because Mangujga was doing it already. The market already had some sort of expectation. Why wouldn't they give us this data? Especially when we actually now have a better currency, which is a structured currency.
Yeah, it's a baffling one. And also, when you also consider that from the same statement, it says actually the governor has got a dashboard. So on any day, he knows what's happening. So surely he is the regulator, but us as market players, as economic agents, we also want to know what's happening on the monetary front So I totally agree with you that I think in the spirit of transparency and also just to make sure that we are walking at the same pace, there is certain basic information that has to be published on a regular basis. It helps businesses in their planning processes. And I think eventually it's for everyone's benefit. Why that is not happening, it's
anybody's guess.
Yes, anybody's guess. Yeah.
Rufaro, you're more philosophical, and I want to get your take on this. If we look at what has happened in the last 5 months, why is the governor still insisting that this is a structured currency? Why can't he do exactly what he's doing, but not call it a structured currency? Because it's not behaving like a structured currency. Why? What's the theory or what's the understanding? Why call it a structured currency when it's not a structured currency? Why put the fear of God, on markets when you know definitely that you're putting people between a rock and a hard place?
Yeah, look, so I think sadly what we're seeing is that there hasn't really been a change in what I think is the central philosophy of the central bank, notwithstanding that there's a new governor. So if you look at Mangudya's tenure, right? So you had an auction that wasn't an auction, and then you had a willing buyer, willing seller market that was not a willing buyer, willing seller market, and you had the central bank tell the market ad nauseum how they're being very disciplined and keeping money supply tight, while the printing press was doing overtime. And what it spoke to me was firstly a mistrust of the market. We can't tell the market, we can't share what we really think with the market, because the market, there are economic saboteurs in the market. The market doesn't want us to do well, so we have to be very guarded about what we tell them. And there is a belief in this idea that Zimbabwe is in a unique situation because of sanctions, because of other challenges. So normal economic doctrine isn't applicable to us. We're special, right? So we need to do things differently, and part of doing things differently is insisting, notwithstanding the market's attitude, on having a local currency and being able to print from time to time to solve some problems. And I don't think that central that thinking has changed.
The thesis hasn't changed. But for all his faults, Mangudya did not arrest people. Well, I think not as many and not as severe as the current crop. And the governor has just been at it for 5 months. About 500 people arrested without bail. I think they were in for quite a while. And we're seeing a number of people getting arrested. And the threats of arresting CEOs, arresting retailers and formal businesses, I mean, that has certainly increased more than Mangudya. Mangudya didn't do that. That's why at a supermarket you could still find money changers, because that was a way in helping people, because essentially people wanted that particular service, and he allowed it to happen.
Yeah, but look, if you actually look at the Mangudya era, they were periods in which they were heavy-handed. I think there was a time when some people actually did get arrested. I'm not going to name names.
EcoCash. Well, we know because it's in the public forum, right?
Yeah.
Remember the EcoCash?
So they froze a bunch of companies' accounts. Some people actually did get arrested and spend a bunch of time in jail. I think that that impulse is part of the culture and thinking that
it's part of our monetary policy.
We need to, because they're bad actors, right? So we can't just be complaining about bad actors without making an example of some people. And so from time to time, yes, they will arrest people, but it's not actually dealing with the underlying problem. Because, and one of the things that, one of the reasons why I think that economic activity has slowed somewhat is because a lot of economic activity was oiled by the power market. and a lot of players, because of the risk of arrest, have just stopped. And and I think that's a headwind in our economy at the moment.
Okay, so Dziva,
So I'd want to add, I don't know if we discussed the statement on the blacklisting of the companies, but I think what I found very interesting is when you look at the list, the who's who of the companies that were blacklisted, I think a key feature is most of them are government contractors. So you would not find your typical business. So the names that we know, guys that are really doing something on the ground. So what I want to say is, so when you look at some of the monetary policy measures, when they come and they are targeting some of these businesses that are paying taxes, that are trying to abide by the rules, whatever, it then comes out as being a bit unfair because they're actually catching strays for
something that's actually happening,
for something that is actually happening within family, within the public sector. And yet also when you look at these contractors, you wake up tomorrow, Tinashe, with I don't know, with the biggest amount in Zig, maybe say 200 billion. What do you do? What are you expected to do with 200 billion? Like sit on it and hoping that it will maintain the value? I mean, yet you know that by end of week, that the value in the hard currency of that deposit will be much lower. So it also just places them at a very difficult situation because they provided a service, and some of them in when they're providing this service, they were actually incurring actual expenses in hard currency. Yeah, so it's a whole. It all goes back to how we are doing our economics. So we are basically most of us are victims of circumstances.
Yeah, but Ranga, I want you to carry through the philosophical thread that our good friend Rufaro has started. If Mangujga knew what was wrong and what was happening, he's got 10 years of experience. And before that, you've got Gono with another 10 years of experience. Do you think there is passing of knowledge to the new governor? You know what they say in the Oval Office, that between the presidents, you write a letter of exit and you sort of say, you know what, Mr. President, welcome to the Oval Office, but these are the challenges and, I wish you well, but please look at this, and is there a proper handover?
I think it's there.
I don't even think it's a handover takeover issue. I think
because we're regressing, we have less information.
An interesting way of characterizing it, I think, from a Zimbabwean perspective, especially given our experience over the last 25 years, I would call it an institutional addiction, to printing and fiscal profligacy, right? So
some very big words there that you
from a 6-year-old,
so
over expenditure.
So day one, you're in office, you have all these high ideals and aspirations, right? But you have a principal that is adamant on spending more than they take in. So you have all these, principles and values that from your education and your business experience in the private sector, right? And you understand the problems, right, and how to fix them. But your principal is saying, I hear you, but I want to spend. I'm collecting $100, and I want to spend $130.
Find a way of making that
make it happen.
Okay, so
and to maybe just to buttress what Rufaro is saying and to answer your question, I think I've heard it several times, and now I'm beginning to believe it that. When you look at Central Bank and our Treasury, it actually is manned by very experienced
and competent, educated people.
So the issue of the institutional memory that you're talking about is there. You'd expect that there are officers that have been working there for more than 30 years, some even 40. So those guys, if you'd sit down with them even for just an hour, they would tell you why each and every minister that have run the treasury has performed the way they did. And they actually, probably they have, they know, they figured a better way of doing things without really creating problems. But I doubt that there's, obviously whenever someone comes and they always come and sort of impose their philosophy. But we are also making it look as if the governors are so independent. Yes, they can bring their own philosophy, but at the end of the day, they still have to take some directives from some
Okay, guys, I'm going to have to disagree with you guys because
Yeah.
I want to hear what you guys why you're not seeing it the way I look at it. When I read this MPS, I read a lot of words, and when I read Mangujga's last MPS, I see someone who was reconciling with Free Hadari.
Okay.
Right? So Mangujga, it took us 10 years to him to finally accept that, well, guys, this is our reality, right? And then we have this MPS. It's like we've gone to Mangujga's
first year
in
office.
MPS, where there's lack of information, it's murky, there's a lot of high-sounding words and, all sorts. Maybe this one doesn't have Bible verses, so maybe that's an improvement.
How is that an improvement?
But there's just, it's a lot of words and lack of information. Mangujga, for all his what's and all, he gave us, there was a time when even on a weekly basis, he gave us the information, reserve money. This is what's actually happening on a weekly basis. And I'm saying that if this new governor, I'm not even talking about policy, I'm not even talking about what the principal is doing, but if this new governor had the good sense to say, okay, let's look at what Mangujga was doing. Let me actually sit down with Mangujga and say, okay, Mangujga, what was happening? How can I then improve on it? Surely it's more information and not less information.
Well, I have a different take. I think what you're describing is a difference without distinction, right? Well, at the end of the day, look, and I could be wrong, and feel free to push back. At the end of the day, what matters is actually the performance on the ground, right? So if you say, well, we've got a new stable currency, the proof of the pudding, can you walk into a bank, place a bid, and get currency? Does the parallel market disappear because you now have a stable market and you can just go to the bank? And for whether Mangujga shared more information than what we're currently seeing, the performance of the local currency in his tenure was just as abysmal.
Well, I think then you're missing the point altogether.
Yes,
yeah. Because what you are actually saying is if there was no price sheet on the stock market, that every in the morning or afternoon trade, you actually had the information at hand, right?
Yeah.
The information at hand determines how you will address the market the next day. If you don't have that information, even if your trade happens, you don't know what's happening in the market. You can't say there's not.
No.
It's not a substantial difference. That's a substantial difference.
It's okay. So
it's a material difference.
So-
a guy who's giving you the information and saying, "Yes, I can't settle. I've only settled 5 million worth of trades, but this is how we've actually allocated the 5 million." And then there's a guy who withholds that information, and you only know 5 months later that, this is actually what was happening.
But Tinashe, the key outcomes in our market, right, is there a parallel market, and what is happening with the rate there? Like we can have zero information from Reserve Bank, but if manufacturers and importers can go into the bank and get money from the bank, and there's no parallel market, that's a powerful information key point, right? So
you're saying without the data points.
So I'm saying.
How do you know?
I'm saying the additional information that we may have been privy to in the Mangujga era It's not material. It's
So
nice
how
to
do you
have.
know-
It's academic. Yes, that's the word I was looking for.
Okay, so Rivaro, how do you know the market is working?
I know it's not working because
Okay, how do you even know the market is not working?
because manufacturers are not getting money from the bank.
When did you know that the manufacturers were not getting money in the bank?
A few weeks after April 2024.
No, a few months after.
No. A few weeks
No,
literally.
you were privy to that information.
Oh, okay, okay, gentlemen. It's now
lots of-
it's now turning out to be just the dialogue between the two of you. But I think I think we are agreeing on the main issue there, that the economy is not performing, that the monetary
The currency is not performing.
yeah, the currency is not performing. That
No, let's hear your view
Yeah.
on information. Do you think that the market is better off without information?
definitely, I'm an analyst, so I prefer information anytime, even if it's bad. Like I've always told managers, executives to say, you know what, even if your performance is bad, just tell me. You know, it's I can always find ways of okay, fine, maybe it's a bad year, but probably next year things will look better. You are not helping yourself by withholding information to the market players, because now you are creating gaps, you're creating a vacuum, and people will start speculating. And usually, someone withhold information when they've got something to hide. But I don't think that is the case with the governor here. Maybe he just got into the office, a new office. He is trying to impose, I don't know whether impose is the right word, but impose his philosophy. And before he does that, he wants to really understand how it works. But I would say, speaking directly to him and say, you know what, say, provide information. I totally agree with Tinashe here that things that were working were supposed to just be, there was no need to replace them, because we were getting weekly updates. Whenever there was an auction or the willing buyer market, we were getting information. So I think it's necessary that that information provision continues. In fact, we need more. And this dashboard that he's talking about, that has got access to. I remember even the deputy minister was also saying the same, that he has got a dashboard every day. He knows what's happening and what could actually upset the currency. We also deserve to know what's happening. We are market players, we are stakeholders, and it's our currency. So definitely we need more information, but that does not necessarily mean it will then change. I mean, the performance from the former governor, I mean, was also bad. That's why the bond note ended up being replaced, and then we got sick. But Tinashe here is saying at least he was providing the information. So I think that's the only request we can make to the new governor, to say, you know what, provide the information and be open to, you know, suggestions and even criticism, and also honest conversations. So when I read the MPS, I actually detected some questionable statements,
Claims, yeah.
claims. For example, to say that we have got stability in the prices. That's not true. You know, we don't have stability in prices. The claim to say we have got stability in the currency, that's not true again.
Oh, and then we did this interesting online survey to get this perception from
and 80%.
the so-called market, that 80% of us think things are dandy.
You see, and also maybe for the purpose of clarity, I think we really need to separate when we're talking of ZiG. I think it looks like the statement was focusing more on ZiG currents and notes, right? So maybe the 80% of people were saying we are happy to be holding the notes. But I think the notes are actually a very tiny percentage of the entire monetary basket. So I think when you're looking at the policy and its impact, let's look at money in its broad sense, not just in its narrow sense. In its broad sense, even that 60, was it a 139 ratio on the RTGS system between ZiG and USD, is just a reflection of people swiping more, people transacting more in ZiG. If you think there's an opportunity to do that and take care of the price differentials. So let's start off with having honest conversation. The ZiG is not stable. That's the truth. I don't know what, unless they're just saying because the rate is fixed at 13.7 on the power.
There's no sugarcoating it, Ranga.
But on the power market, it's actually 23.24.
Between its introduction and today, it's lost more than 50% of its value. That's in less than half a year. This performance by any standard anywhere in the world is abysmal.
So let's get to interest rate policy and statutory reserves. They kept them more or less the same. So despite what's happening with the stock market, despite what's happening with the power market, despite what's happening with the prices, they still insist that ZiG borrowings, the interest rates are between 11% and 25%. So they're making it extremely cheap to borrow in ZiG.
I find the conversation about borrowing money in ZiG quite amusing, because I think we're discussing a storm in a teacup. Number one, because ZiG's market share is so small, and then number two, I also don't understand why.
Well, borrowing in ZiG has actually increased.
Yeah, no, it's increased, but it's increasing. What I also don't understand is why the central bank puts its thumb on the scale when it comes to interest rates. Right, the market should determine interest rates, but that doesn't. 20% seems so arbitrary as well. Like, why is it not 25 or 15? What was the methodology that arrived at this number?
Because it was a structured currency. So ideally, it was a structured currency, but in the same.
But even if it's structured, actually, especially if it's structured, right? Because on paper, the way it's structured is that it's married to the gold price and the US dollar, right? So what are interest rates in US dollars? Okay,
5%.
They're single. So how do we, if we have a currency that is
premium,
a 15% premium for a currency that is fully backed by gold and US dollars? Does that make sense to you?
Yeah, it does make sense to me. If it was fully backed by gold, because that's the trick. And that's
why such a big premium?
You should even be higher.
Where will the
because of where we are coming from, right? The premium I certainly believe that the premium must be there. But the issue that I want to raise on interest rates is you can't call it a structured currency, and it can't convert to gold. Because the reason why it converts to gold is because it's mimicking gold, right? But if it stops mimicking gold, then it's no longer a structured currency.
Well, gold is like only a third of the mix. So when it was introduced, it was 185 million
US dollar, and then whatever it is. Because remember, it's a derivative, and it must mimic. If it's not in true essence where I can convert fungibility, where you have full fungibility, at least it must mimic. And by mimic, it means it must do those things that the US dollar can do. So if I walk into a bank and I want to import, I should be able to import. Because the minute I can't do that, and all in essence it's mimicking Zim dollar before it, then surely its interest rate must be attached to the Zim dollar before it. Because it's no longer mimicking, it's no longer has the fungibility.
It's basically a fiat currency.
It's a fiat currency. And the rules it must abide by are fiat currency rules. So I think that there's a lost opportunity, again, because Mangudjka had set the interest rates high, which was a good thing, in fact, not even high enough. And then the new governor comes and he reduces interest rates from as high as 100% back to 25%. Imagine if you're a business and now you wash with ZiG. What do you do with that ZiG? That's probably what's propelling the stock market, because people now, there's an arbitrage opportunity.
Don't say that, otherwise they will come hard. We are brokers. There's nothing that is propelling the market. Look, it's just liquidity.
Okay,
injection.
So let's look.
There's this proposal. In fact, it's not a proposal. This structure that they've come, the liquidity management committee or something like that.
It's actually called.
It's
a long word.
Yeah, it's quite interesting. But I think what's coming out is, the
establishment of the Monetary Policy Implementation, Monitoring, and Evaluation Committee.
You see, but I think
that just speaks to To me, I chuckled when I read that. I just thought,
What does Jeff Bezos say about more and more meetings?
any entrepreneur, are more meetings accretive?
So more
committees,
more meetings, more
creative?
control. But yes, yet I'm not seeing an honest conversations around what is our role in the instability that we are seeing in the currency. Is having more committees or more meetings going to be helpful? I don't think so. I mean, the things that have to be done.
I think what they ought to do more that will be accretive, that will be helpful, which we didn't see in the run up to this MPS, and I think we've got a pretty impressive network in terms of the people in capital markets and in the formal business sector at senior leadership levels that we interact with, and I never got one call or message. I never participated in a single conversation ahead of the publishing of this MPS where someone was saying to me, look, the Reserve Bank has reached out to me. They, this is
Well, it says they've been consulting.
Yeah, they say so. They make this claim, right? And I'm saying, and I have all in my entire network. Nobody's ever actually reached out to me and said, you know what, the Reserve Bank is interested in my opinion about X, Y, or Z. What do you think? I want to respond in a thoughtful and serious way. I know you're a capital markets expert, or Tinashe's got an interesting economic perspective. Did anybody reach out to you to say, hey, you know what, I'm having this engagement with the Reserve Bank ahead of the monetary policy statement. Can you help me with this input? Right? And I would actually make the claim that this statement is actually devoid of any meaningful input from the private sector.
Okay. Yeah. Very strong words.
They do consult, but obviously, I would speculate.
They have a right to reject the advice.
I would say that I would speculate that they've got their own preferred
apologists.
Maybe not apologists. They've got their own preferred groupings or people, but true to your word, I've never encountered any of the people that you interact with. Maybe we interact with the wrong group.
The wrong crowd.
You need to change.
Yeah.
You need to change.
You need to make new friends.
Yeah.
I think so. Okay, so gentlemen, Forex inflows are actually increasing. Imports are also increasing. Going forward, let's hear your last words. Just a synopsis of what you think is going to happen so that the audience is very clear.
Okay.
Yeah, I would say, you see, Zim continues to be a very unique market in terms of foreign currency generation. And we have said that several times that we actually are punching above our weight. So when you look amongst African countries, we are probably one of, you'd say maybe per capita, top countries in terms of generating foreign currency. But just like any resources and in any society where I think there's deep-seated corruption, whenever the receipts are increasing, the appetite will continue increasing. So I'll tell you that even if we increase our foreign currency receipts to even 20 billion a year, the imports will be much higher.
The problem remains.
The problem remains. More so because we have got this structure where there's someone who's allocating currency. So there are a lot of inefficiencies. So someone just knows that, this year it looks like you're going to receive 10 billion. Already there are submissions for 15 billion worth of imports. So that's our biggest problem. We are supposed to be benefiting from this currency. And typically you wouldn't find... just look at, go into the history and check the list of companies that were getting foreign currency. You wouldn't find some of the bigger employers, some of, businesses that have invested heavily
So there's a lot of rent seeking.
There's a lot of rent seeking. And unfortunately, the rent seeking is actually starting at the point of allocation. So I don't know whether there's an office or there's a person. That person is very powerful, who wakes up every day to say, you know what, Tinashe is gonna get this much, and
at a 40% discount.
Exactly. So don't expect that at some point that number would have a lower import figure. You know, so even if we increase our exports to whatever number.
So, in a nutshell, our problems remain.
Is
Rufaro?
Yeah, look, so
Going into the next 6 months, what are you saying?
Zig is dying. In a nutshell,
Rufaro, you move from Zig is the best thing.
I never said Zig was the best thing.
Bread to
the
Zig
best
is dying. I mean, the movements, eh?
No. I and you know, when it was announced, what I said was, if they don't print, it has a chance of succeeding. And you know, the governor was adamant that he's not going to print. But 5 months in, you know, the jury
is actually admitted to printing. What reserve money has actually increased by about 22% of the local currency.
The jury is in.
Real.
We've printed, whether or not, you know, the central bank concedes the point is immaterial, because the market is telling us that there's been printing. And I don't see any evidence from this monetary policy statement.
So when you say it's dying, what do you mean?
So if you go back to the 4th of April, the day before Zig was announced, and we had what we called ZWL, that currency was losing market share every month. And why was it losing market share? It's not because that's what government wanted. In fact, government wanted the opposite. Government wanted this currency to grow market share, right? So the market was rejecting this currency. Why was the market rejecting this currency? It's not because they're economic saboteurs or because people are not patriotic. It was because the issuer of the currency was being very irresponsible, and this currency was losing value week in, week out. And people, to protect their savings, opted not to hold ZWL, to trade more in USD, right? And so you have this heavy-handed policing where if you have Zig, you don't actually have the option of participating on the power market, because you could get arrested, and you can't buy US dollars at 13.9. So the next thing is you just reject them, right? You say, you know what? I don't want to deal with this currency. It's too hard. And so I think that path that we were on before Zig, where the local currency was losing market share, we are back on that path. And every month.
So you're saying Zig will die, not
eventually?
That it's dead.
Yeah, no.
Okay.
So, I mean,
All
look, you can still go
fair
walk into a
enough.
supermarket today and, you know, buy a case of Heineken. so Zig is alive, but it's sickly, and short of a significant course correction from the central bank, I think by year end it could be dead. It might survive another 3 to 6 months after that, but it's definitely dying.
Okay.
And for the first time in so many years, you might actually see more and more empty shelves, because businesses are really struggling to replenish their stock. The working capital is under stress.
But Rufaro thinks differently. He thinks we won't see empty shelves. That's why I was interested.
Of course, I've already seen them.
Empty shelves.
Yeah, I've already seen. Oh, I almost said the shop. Yeah. So just
good thing you're not drinking.
Yeah. Yeah, I've already seen them, you know, and I think on each day that passes, I think more and more of those shelves are going to be empty. And what you tend to see on the balance sheet of these businesses is the pile up of Zig. And because most of these products are imported, even the ones that you have to buy locally, the suppliers worried about being able to replenish their own stock would want some USD. It means you won't have stock. You know, you're depleting your stock. You've got Zig balances, but you can't do anything. So something has to give. If the only way you could have more, most of these businesses being able to restock is if they can access foreign currency. And we might see a policy shift again to, okay, fine, you can sell more in US dollars, whatever, as a way. But you know what that does? It actually puts the burden on the businesses to start recreating their working capital again, But when this shift, when this shift is happening, obviously you are decimating someone's capital for the benefit of another. Yeah.
Okay.
So it's a very difficult season that we are getting into if you are running a business, and like we experience it even in our businesses where all of a sudden everyone just wants to pay you ZIG, and they're paying you ZIG, and they're paying you ZIG at the official rate, and you'd find some of your outstanding debtors, someone who hasn't paid for like months and months, are like, this is the right time to be paid. What are they doing? They're just dumping some ZIG on you.
Wow. So my view, my analysis of this monetary policy statement, I'll go back to what I've alleged between Mangudya and the new governor, John II, is that we've gone back, we've regressed rather than moved forward. Because I think the challenges are there. The challenges that we had with Mangudya, the same challenges are there. The same political principle is still there. So that problem is sort of a given. Mm-hmm. But what we are seeing is we are not seeing an improvement. And I'll tell you where I get really worried. Because it's repetitive behavior. So even our national psyche...
Isn't that just because you are high in neuroticism?
Well, no. I'm actually very low in neuroticism. But our repetitive behavior is that this sounds more and more like when John I, when Mangudya was starting out, when he was trying to figure it out. So why I say this is because let's look at the reason why we have a monetary policy statement now, immediately after the midterm
fiscal policy
is because they're supposed to speak to each other. Mm-hmm. This monetary policy statement does not speak to what Treasury has said in the first 6 months. Treasury has told us that there is a 13% budget deficit in the first 6 months of the year. Now, that should have translated into the numbers, the MPS. The MPS should have told us what they did with that gap. What happened to that gap? How was it funded? The governor should have spoken directly to that, because that's why the MPS is coming immediately after the midterm. And we saw this problem again last year before the governor came in, where the budget was announced in November, and then the monetary statement only happened in April, 4 months later, and they're not speaking to each other. And I think that it speaks to the problems that we saw Mangudya having, which is the problems between Treasury and the central bank. Fiscal policy and monetary policy are not in sync. And the two principles act as if they're managing different countries. And it's coming out in their statements. They are not speaking to each other at all. And I think that policy coordination is very, very, very important, because us as market players, that's what we're looking for in terms of policy. We're looking for policy that can say, you know what, these are the challenges that Zimbabwe has. There's no country that doesn't have challenges. But you see the Fed, you see Powell coming in after the job report and saying, well, this is what I'm seeing, and I think that this is
okay.
What we are...
I think the Americans are a bad example. They're mismanaging the economy.
No. I'm saying that's given. Mm-hmm. That you have you're mismanaging and you have a problem, it's a given. But that a governor must come out and speak directly to the pulse of the economy is something that every governor does right across the world. Whereas in Zimbabwe, Mangudya started off speaking alone, but he ended speaking directly to what was happening at Treasury, right? And saying, well, there are these problems at Treasury. There's this deficit at Treasury. And then all I'm doing is just monetizing the deficit. I'm not in control. And then they started having problems with Treasury. And then you have a new governor, and instead of the new governor taking on that mantle and saying, okay, how do we resolve this problem? Because our monetary policy is not speaking directly to fiscal policy, and fiscal is not speaking directly to monetary policy. And I think that's part of the problem. I'm not saying that's the bigger issue. The bigger issue is there. The elephant in the room is there.
What is the bigger issue in the room?
Listen to Gono and then you pick it up. So the bigger issue, the bigger issue is there. But certainly, as bureaucrats, we can certainly improve from Mangujga's years. That's my big worry, that we are not improving. It's repetitive behavior. We've gone back to 2014 when Mangujga took over, which is a, lost opportunity because, John too is a clever guy. He's an intelligent man. And, you would have thought that you would have picked this up. But here we are. Please let us know in the comment section what you guys think. Maybe we are just talking bollocks and we are not really.
You certainly shouldn't take us seriously.
Absolutely. After all, it's a Friday afternoon and we are ready for the weekend. And that's precisely why we have the show on a Friday. Anyway, ladies and gentlemen, thank you very much for the support. Thank you very much for listening. Enjoy your evening and have a wonderful weekend. Cheers.
Cheers.